What's going on, guys? Time for another recap. So let's jump right in. So our thesis today was pop to drop at open, right? A couple different fibs to go over here. So today we got a little opening pick back up and down and continued, right? Because our long was done. So if you follow the X and or the old Twitter, we said we had a beautimous long setting up here, and I reiterated here last night where we talked about Fibonacci zones and where the price action could go. So I said this long is still ready to cook above 20,200. Fill up the fib range of retail sales. What does that mean? That means the algo from pre-market, that big old bump right there, that crazy data candle you see snapping back and forth, that is the retail sales data. And if you notice here, we don't have any data on the top of that. If you look here, where's the data between the golden pocket and up? Where's the data between 20,225 and 20,270, right? There is none, right? This whole zone right here needed to be filled up with data. That's what I called, right? And that was the last piece of the long. And then we had for the premium group here, we had a pop to drop sentiment, right? So let's take a peek again. I want you guys to pay attention to what we just said here. And this is that top piece of the data. So I made it in teal here, bluish color, whatever you want to say. This had the opportunity to give us a little visual here. So this is that retail sales data. This is where there is no price action. You notice all price action is at the bottom. So what does that have to do? During live hours, we do need data up there. So what did we have? We opened up through the holiday, right? And then into the pre-market, a big push long, because that's what we said, above 20,200, we were going to force up, we were going to fill that data. Well, we got an extra squeeze from it. So here's that data fill on the holiday and push up from 5 p.m. And then we had the dump. Well, what would have prepared ourselves? How did we think pop to short, and what did we see coming, and how did we know, right? Well, it's because one, the long was done. We finally got the data here from the retail sales and down. And then we started with this algorithm right here. Okay, so we have another algo blip right here, 725 central on Qs. So let's explain these two pieces of the pie first. So retail sales, we have the downside metric, right? So anything outside of our box, we look for the walk down extension. So here's our Fibonacci box, right? Comes down to the 1618, loops it back to the golden pocket. Okay, we called that one. Now comes back down, needs a breakdown. Next stop would be 482.65, but we had needed to fill that data, which we did. Let's come back. We can still see those fibs, right? So today, pop out of the gate, pushes to the teal zone that we called. We said it needs live data, which means live trading hours in the black here, not pre-market. We need a live data day. The algorithms need to fill this up with live day trading time, which it did. So it pops to the exact zone we needed to, drops, hits the 1618, back to the golden pocket again, and finally magnets down to the 2618, 4265, and continues the drain, right? And where did we get to on that backside? All the way down to perfectly the 423.6, right? So again, this is the retail sales data. That is just a box from retail sales, okay? And that data walked itself down to the 1618, the 2618, and then 423.60 right here. That is the extension. 480 3 cents. You can see where the market bottom today to the penny of the retail sales data. Fibonacci's are the best. Now let's look at that intraday algo, or not intraday, pre-market algo we had right here on Qs. So we took that, we made it blue, and then I pointed it to the downside. So I overlapped those fibs, same thing. So we came up here, we were inside, pushed to the golden pocket, failed, pushed to the 100, 1618, 2618. So either one of those, again, it's not if the Fibonacci is going to work, it is when. And you could have drawn either one of those and worked those out. Now let's take a little different perspective of the trade day today. I want to look at SPY. And remember, we had a daily Fibonacci because what walks up must walk down. Same thesis, Fibonacci, live data. Remember those things, okay? So this is a daily candle hit, and I'll show you where we get this daily. We used the body right here. Boom, 614. Okay, the body, nothing to do with the wick, just the body. Okay, and I pointed that to the upside because that was going to give you the top of the market, and then usually what comes up goes down, right? So on that huge force up day, here's the body, this is the box, there's your fib range, 1618, 2618. We missed the 423.60. That means there is a pocket of data right here that could potentially fill right here, right? There's no price action. So there's a potential there. What's it do the next day? Gets lazy, chops around, no big deal. The day before holiday, right? Juneteenth. Again, we are missing data right here, okay? So what happens when we get that force up? What goes up and walks up through the Fibonacci range must walk back down, right? Now here is a live tag finally of the 423.60, right? So look at how these algorithms interacted today with our fibs. Computers pushed it down in pre, right to the penny, 423.60. This is our first live tag. Very important. Hits the 423.6, pops it, then drops it, right? So this is where another really good trade came in. We had a member, I believe it was Mark. I don't want to give credit to the wrong, but I'm pretty sure Mark had identified the gap. We love intraday gaps. There is a 1 minute gap right here. The algos will attempt to close that before a directional pick. So we had a nice long call out right here for our group where this algo shot down. And what do we look for? Retrace, retrace. Didn't quite hit it. Higher low. Bam. We called this higher low range right here. We had a monster trade. So I ended up today, what did I end up with? Like 1400 something, 1483. So I ended up with 1483 off 2 trades, 2 ES scalps. That was pretty much it. We had a 585 and then the rest about 900 something off those 2 ES. And that was it. I missed the dump. I was waiting for further retrace and then I had doctor stuff and cancer stuff and blah, blah, blah. And man, had a lot of crap going on. So I was not able to get the wash ski here. But now remember, the fib range, let's talk about it. That daily candle we just set on SPY, 423.60, right here. Finally got a live tag. It's going to walk itself down from 423.60. Obviously, the next fib on that daily chart that we just looked at is the 2618. That's going to be your next target for your short, right? So it's going to go from the 423.60 that it hit finally today, right here, and it's going to retrace and give up to the 2618, right? And look what it did. Shied it. Nope. So there's another short. Boom. Hit it. Okay. We have a live tag on the way back down. 423.60 goes 2618. And you guessed it. Next stop is 1618, right? So let's take a peek at what's going to roll over to tomorrow for the potential. You see the 2618 defended. You see the 1618 where she is right there. So overnight, a couple things can happen. We can either get a pop through after hours, right? So whenever futures open up, we could pop it back through and then continue that walk down to the 1618, or it'll just chop and then potentially have a move down to the 1618 as well. So that Fibonacci from the daily chart gave us the full uptick and then gave us the top today where we could potentially fail, right? So with that being said, let's take a peek at some of the anchors, okay? Because we had some good intraday anchor trading as well. So here's our intraday anchors. What we like to do is we like to do a live high-low, and then we usually play off that. This right here was another big piece of the pie on SPY for that higher low I said that we took, right? We said it was going to come back and fill that gap we found on TOS on the minute day. Remember, Mark? So low, higher low. This is that higher low we said. So if something is holding the anchor, right, we put it on low of day. Perfect. Pops up. Oh, we shied it. Look real close. There's no tag right there. So we still deserve a tag there, right? So we need a magnet. The price action will attempt to push again to actually hit it. Why? Because we have no first tag, and algorithms love magneting first tags. Here's the top down. Here's the shy. Needs to come up again. That's where we develop the higher low thesis, right? And this one shied it, which is fine. Popped up, higher low, boom. There, we got the top down. That's what we wanted. And then from there on, boom, hits the bottom. So you could have easily had a scalp long here, higher low, push to, short here, scalping back down to the anchor, because now you have a first tag. So you will get a knee-jerk reaction to the other way, generally speaking, higher percentile chance, down to another first tag. And you had another blip up before she walked herself back down, right? Let's take a peek at Qs. Same jam here with Qs. Let's make it one big panel. Little simpler that way. Holy moly. I don't know how that just randomly turned out. Let's get out of here with that. All right. So another big takeaway right here, Q, same exact jam, right? So check this out. We have the top down and out. These are a couple old anchors from prior that I said we'd most likely backtest, but let's focus on the intradays because you guys should be scalping these a lot. Here's the low a day. Okay, finally pushes back up. And here's high a day. Where's our first tag? Boom, right there. and then down, boom, slows down, and then washes. Now, this is a pretty hard one to catch back up to for that speed of the wash, because Q's was pretty animal today, and it spent a lot of time under that anchor. So this brings us into another longer term anchors usage, because if you remember this from prior videos, this blue one is from the bottom of CPI, and it has been a massive structure rolling support since then. CPI candle bottom, 5-minute chart. Every time we have came into contact with the anchor view app from the bottom of the CPI 5-minute candle, we have had rolling support. So no doubt when we come up to here, after the market has already pressed way down, the likelihood of it continuing past that view app is close to none, right? Because we already moved. Why would you, in the psychological aspect, we already moved this entire point range from like 487.50 open all the way down to 470.92. You think we're not just going to bounce? You think we're just going to continue washing a massive CPI roll up? No, we have to bounce. So we were under this anchor, and we need a what? Back test of a broken anchor. This is a broken anchor. This is something more unique, because once it loses an anchor, this low anchor right here that I'm talking about, low a day prior, this one, it got lost and it ran away. This is a very hard panic sell. Okay, came up, shied it, did not tag, panic sell, because we're looking for a back test of confirmation after that loss. It just liquided out, hit the blue, CPI lower, bam, there you go. There's your reshort, because it finally hit back, boom, and right back. Again, just utilizing those anchors intraday, and they worked out pretty well. You can also keep moving these anchors over to the next high and the next high to help you with your retrace points. You have 3 different highs you could use up here for the day. This is your last lower high, and if you just use that one for a retrace and your fresh lows, you could have seen a very nice one as well from this third lower high, because we run multiple anchors. We'll have 2, 3 of these suckers just like that as a wave, more of a wave of support resistance, right? So came up from the CPI, boom, perfect hit right there, boom, right back, boom. You could have played those ranges pretty well right there. And as well as the bottom ups, you can easily just come back around, find low a day here, right? And then another structured piece. So it lets you, allows you to have a higher percentile chance, right? Limiting your risk coming off the CPI candle, resistance, lower high. And then I would have took a short from here and then covered into the low a day anchor here. And of course, it slipped past it a little bit, right into that CPI lower again, boop, and right back to the lower high. So again, these anchors are just a really good justification of intraday means of limiting your risk for support resistance, and it rolls with the price action. And the price action loves to magnet and hit those lines. It has to hit those lines. It loves to backtest those magnets. So I hope that made sense. And if you followed the X, you were definitely ready for that move, because we called it 2 days in advance for that long. So if you like us here, if you want to support the channel, everything's in the description. You want to trade with us live? We narrate this stuff every single day. Come trade with me live if you want. Link is in the description for our website. If you're an Apex trader, we do have codes for Apex funded traders, because we do trade with them plus our live accounts. And if you want to use with them or trade with them, code is down there to support the channel. We appreciate it much. We'll catch you on the next.